Welcome to Taxbytes for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Avoid the hassle of dealing with your bank and transfer online, by app or over the phone with Currencies Direct today. Keep listening for an exclusive offer for Taxbytes for Expats listeners, and thanks to Currencies Direct for their support of this podcast. Hi everyone, welcome to this episode of Taxbytes for Expats. Great to have everybody on. Today we're going to talk to Rob Priestman, who's a business development manager with EBS. And a brief intro about Rob is he's a father of two, an avid ultramarathon runner, triathlete and a seasoned mortgage professional, and he has over 20 years of experience. Rob's driven by a passion for problem solving and spotting potential in every situation. He brings deep market expertise with a mindset focused on growth and resilience, and he puts relationships at the very centre of his work. By doing this, he builds long-term connections through networking, trust and value. So whether in business or on the trail, Rob thrives on challenges and he keeps his finger firmly on the pulse of the property market. This is something that speaks right to the issues that many of our clients have, particularly when they're planning a move to Ireland. And we're really, really happy to have you on, Rob. Thank you so much for joining us.
Thank you for having me, Steph.
It's great to actually get you on. We've been threatening to do it for a while, so it's great to actually sit down and have a chat about all things mortgages. So I've lots of questions for you, Rob. We've previously spoken about mortgages on this podcast, but quite some time since we've kind of, honed in on what the market's doing and, what somebody in a role like you, what your comments might be. But before we jump into that detail, walk me through what your career in mortgages has looked like over the past 20 years.
Yeah, so as you said in the intro, I have over 20 years experience working in the mortgage industry. I started off in a broker in 1999, and I suppose I've had many various roles within that broker as mortgage advisor, associate director, head of private clients. But I was very lucky. I absolutely loved it. I was with that broker for many years, and the focus, I suppose, is no different to what it was now. It was helping people, through their journey on getting a mortgage. So, I mean, that's one thing that hasn't changed over the years. And, I suppose over those years, I've been very lucky to build quite an extensive network, within the mortgage area, both in Ireland and overseas.
Wow, yeah. Illustrious career, 20 years. I'm sure you've seen it all. So in that time, what has happened in the Irish mortgage market? What have you seen change, over that time frame?
Well, I suppose lending itself has changed quite a bit. Obviously, during Celtic Tiger years, it was very different in terms of how you actually go about getting a mortgage, the process. Some might say probably easier. Certainly, lending now is a lot more structured. We've had the introduction of the Central Bank of Ireland macroprudential rules, both on loan to income and loan to value. In terms of a particular multiple that you can borrow off based on your salary and your circumstances. And then obviously the affordability piece in terms of the repayment capacity. So now someone would have to prove that they can meet a particular stressed repayment based on their, last 6 months, a snapshot of their last 6 months through their, maybe their rent, their savings, their current account build up, any ad hoc payments or maybe a loan discontinuing. So I think with all that, it's a lot more structured. So a lot more black and white in terms of what someone can borrow.
Mm. The market changed, didn't it? Yeah, drastically post Celtic Tiger. Probably for good reason in hindsight.
Definitely. Yeah.
But I know, even I didn't take a mortgage in that era, but when we did go to get a mortgage in Ireland, a lot of that terminology like LTV and loan to value ratio, all these things are thrown around. And exactly like what you just said there, like ultimately what's being tested is, does this person have an ability with a certain level of comfort to repay this?
Yeah.
Do you see those rules working well practically in terms of when do you see many people struggling at the moment with their mortgage repayments, or do you feel the rules do what they were designed to do?
No, I think there's a lot more cautious and prudent approach in terms of lending. So the idea of that is that I suppose someone, if interest rates were to increase, that someone based on their circumstances and based on their past performance is going to be able to afford that mortgage. So in reality, people should be less concerned in terms of borrowing.
Mhm.
Borrowing and their borrowing capability, because they're obviously a track record in showing they have the ability to repay it on that higher interest rate.
Yeah, it's like a backstop for people, isn't it? It's giving them a level of comfort, which is nice to have,
Yeah.
but sometimes makes it challenging. And I'm sure you come across challenges, particularly for the cohort of clients that we work with. So this podcast really is speaking to people who are planning a move back to Ireland, maybe having spent time abroad. So that cohort tend to kind of come back, want to get onto the property ladder in Ireland. Sometimes they want to build property, maybe they have land. Then we have a cohort of people who coming to Ireland for the first time, pretty green in terms of what they know or they don't know about how the market works, and particularly how mortgages work. And they often can retain or intend to retain a foreign employment, so remain employed in a different jurisdiction, albeit while working and paid in foreign currency. Bank statements not with an Irish bank. They're the two main class of people that I think are probably listening to this that are interested. And then there's probably a third group. So maybe somebody who's, later in life, coming up or closer to retirement years, and maybe has a gap to kind of get into the Irish market, and just keen to understand what mortgages might look like. We might like reflect on each of those categories separately as we go through, but in terms of demand from an overall perspective from these people returning or new expats coming to Ireland, what are you seeing at the moment? What is the market telling you in terms of who's coming to Ireland?
Yeah. Well, I suppose I personally have noticed a huge increase in inquiries and applications from overseas, predominantly from a number of areas, and probably for different reasons. So US, Australia, UK, Singapore, Hong Kong, UAE, areas across Europe, and they're all looking to inquire in terms of buying a property, either as a holiday home or I suppose a home to return home to in the future. So that would be someone who's looking to get on the property ladder now with a view of coming back in the next couple of years, and
Mm.
using their current circumstances in the country that they're living in. And that might be a different currency. So, obviously, if they're over in the US, we can use their US dollar income. That in itself brings an FX element into the deal. But certainly, in terms of an increase, we've seen a huge increase in that over the last few years.
Yeah, and we would see similar, and I think the figures speak to that in terms of the influx from abroad. So when those clients come to you and they want to buy a property, and from abroad, what are the main three things that you tell them to do before they start the process of applying and drawing down a mortgage?
Yeah, so I think the obvious one would be just to get financially ready. So it's talk to, me, or someone like me, in terms of, what is required in terms of that mortgage process, getting mortgage ready, knowing, what costs are involved. I think that's a huge thing, that there's no hidden surprises in terms of, whether it's stamp duty or whether it's the loan to value on how much you can borrow and how much cash you have to put into it. Solicitors' fees, things like that. Secure mortgage approval. So that's obviously a part of that one as well. So, you know, I would have a lot of clients that would come in, and they will get the mortgage approval so that at least they're mortgage ready for when they do find a property, that they can move on and they're not on the back foot straight away. The second one I would think is probably get professional, engage a professional support. So that's your solicitor. I would usually say, look, I would always try and go on a recommendation on that one. So if there's a solicitor that's been recommended to you, you're going to be working very closely with that person. So I think having the right team there with you is absolutely essential. And then another one is probably, in that section, is engage with the likes of a buyer's agent. The buyer's agents will know the market that you're looking in inside out. They will search the market, bid on your behalf. And I think that's particularly in a market where there's a huge supply demand issue. I think having a buyer's agent on side will be, or a surveyor, of course, as well. And that's it. The third one is to do the preliminary due diligence. And what I mean by that is learn about the market or location that you're about to buy in. So know what you're looking at, the type of houses, the location that you're looking at. Know all about that location in terms of whether you're looking for a school in the future or now for your children, or even if it's transport. That you're aware of that, whether it's on the Dark Line or the bus route or whatever the case may be, but to do as much research and become an expert in that area as much as possible before you dip the toe in.
And just to kind of backtrack slightly on something you said there about, somebody coming to Ireland who has a foreign employment or an employment that obviously is, required to kind of demonstrate the ability to pay the mortgage. Is there a required amount of time the person must have worked for that employer? And secondly, does the fact that they're being paid in foreign currency create problems for them? What does that look like practically?
So, I mean, of course, the whole case is assessed based on, the person's circumstances, and how long they've worked within the business is going to be different for everybody. But I think if there was a hard and fast rule, is that, they must have completed their probationary period prior to making the application. There are cases where we can possibly get probation waived, but ideally the person will have completed their probation. So, that would be, typically 6 months in most businesses. And that's it. In terms of the income used, it's, as a rule, where we're using a non-euro currency, we will typically take 80% of that income. So if they're earning US dollar, we would take 80% of that income. And that's to allow for currency fluctuations.
And what you mean by that is 80% of the income is taken into account in terms of determining their ability to repay the loan. So that has a direct impact on the amount of loan that they can qualify for. Is that what you mean?
Yeah, so it would be taking 20% of their income off, and then applying the Central Bank of Ireland macroprudential rules in terms of that multiple, whether it's a first-time buyer, it's looking at 4 times that salary, or as a second-time buyer, up to 3.5 times that.
And in terms of obviously, EBS are an Irish company, I would expect they expect their repayments to be made in euro currency. So the client needs to have a process that 80% determines the loan value. The repayments are obviously going to be made in euro. So there needs to be a currency conversion done, which would arguably be done to meet other expenses in Ireland anyway. Is that correct? So you'd need.
They would need an Irish or a euro bank account to repay the mortgage, so they can't do it from overseas.
Okay. Yeah, that's important.
Yeah, absolutely.
And that's the case even if somebody's trying to buy a property in Ireland when they don't reside here. So if they're in Portugal and they want to buy a holiday home in Kerry, they need to open an Irish bank account and ensure that they have.
Yeah, Portugal, obviously they'd be under the euro. So as long as they have a euro.
Yeah, bad example.
as long as they have a euro bank account, they can do that. But, nowadays a lot of people can open bank accounts from overseas. But I do think that's one of the important factors to take on board in terms of getting mortgage ready, is to have that Irish or euro bank account ready that you have the ability to actually repay the mortgage from.
Because I'm not an expert on it at all, but I think observations we would have just from listening to clients is that, opening a bank account, if you walk into a high street bank, can sometimes be a bit of a paper trail.
Yeah.
And obviously now we have other players in the market, like Revolut and other providers who allow bank accounts to be opened, with Irish IBANs, et cetera, without much disruption. So clients have to kind of just be practical, I think, and think outside the box if they're hitting roadblocks along the way.
Yeah, and that's an interesting point. I think that there are plenty more options for people nowadays than existed even a few years ago. So that's definitely a changing field all the time. So yeah, to have those options there is great.
And now a quick word on our episode sponsor, Currencies Direct. If you're looking for a fast, easy way to transfer money to or from Ireland without the hassle and cost of dealing with your bank, keep it simple with Currencies Direct. Whether you're buying property or require regular currency transfers, Currencies Direct can help you save money. As a special offer for our listeners, when you use the link in the show notes and quote expat taxes when registering with Currencies Direct, you'll receive a €50 one-for-all or Amazon voucher when you transfer €5,000 or more in your first 6 months with Currencies Direct. Registration is quick and easy, and you decide how you transfer 24/7 via their online money transfer service, over the phone with one of their friendly experts, or by using their handy mobile app. Check the show notes or head to currenciesdirect.com to register, and thanks to Currencies Direct for the support of this podcast. So when you're looking at a client's case before you submit it for underwriting, what are the issues you're looking for? How do you identify them? What issues could come up?
Yeah. So I think from every phone call that I do, I'll do an initial consultation with anybody. And this is pre-submitting any documents or anything like that. So we'll have a 30-minute conversation, just to go through the background of the case, what they're looking to do, what they want out of it, and so on. And I think from my perspective, I would usually identify any issues at that point. And for any application, it's about getting someone mortgage ready. So not everybody, it's not an ideal world. So when people are coming to you first, some people are just, they would not be mortgage ready. So my job is obviously to guide them through that and put a plan in place in terms of what do they need to do to be ready to actually get an application submitted to to credit, and obviously get it approved. In a lot of cases, this issue might be around repayment capacity, where we're looking at the stressed repayment, and we are looking at someone's ability to actually meet that stressed repayment. The one thing I would say when buying overseas is that you cannot use the likes of rent or their existing mortgage as part of that stress number. So sometimes that throws the figures out, because obviously if you were living and working in Ireland and you were looking to buy in Ireland, you are replacing that rent or existing mortgage with the new mortgage. Whereas the thought process is obviously they're going to have their rent or existing mortgage overseas until they actually return. So we have to keep that in as an outgoing. So that's it. So it's really to look at that and devise a plan in, getting someone in the best possible position to actually get mortgage approved.
And in those situations, then, if you're still taking into account the foreign rent or the foreign mortgage, does that diminish the amount that people tend to qualify? And do they revisit that when they come back to Ireland and that expense is no longer being incurred? How does it work practically?
Yeah, it can do. It can obviously impact how much you can borrow. Because you obviously have that as a commitment, and we have to factor it in. I do think that is prudent to the application. But so you could look at two scenarios and let them know what they could borrow based on their current circumstances when they're living abroad, or if they were to return, what that figure might look at based on a particular income.
So, like, thinking about the process of getting a mortgage, talk us through what does it look like from when you have that like initial conversation that you reference with the client to when they actually get, I suppose, the keys for their house, ideally.
Absolutely. So, from my perspective, it starts with that initial conversation. So, we go into quite a bit of detail, look at the mortgage process, the buying process, what's involved. I always say, look, knowledge is key. So, it's just to try and give as much of that information to the client and, talk them through that. The next step, then, I would typically send them a checklist or a detailed checklist outlining what documentation is required. So that checklist will be tailored to that customer, whether they're self-employed or employed. It would be different requests on the documentation. Bank statements, it might be in a different language, so we need to get them translated. Credit reports, etc. So again, I would usually follow up with a phone call after I've sent that checklist, just to go through that and see if there's any questions. Once the customer has all the documentations, I will then send them a link where they can upload the documents, and then that's when it's over to us, where myself and my team will start working on the application. So a little bit of back and forth at the beginning. All the heavy lifting is done at the start, and we try and get the application in its best possible form before we submit to the credit team for formal assessment. When it goes in to get assessed, obviously, assuming that there's no further queries and they're happy with it, it will be mortgage approved at that point, and that mortgage approval will last for 12 months. The mortgage approval is not properly specific, and I think that's the great thing. So they can use that then for whatever bidding or property that they want to go with. And yeah, I think, as I always say, look, that's when the hard job starts and actually finding the property. But I do think doing that and having that mortgage approval there before starting that buying process is absolutely essential. It just puts you on the front foot that you're ready to pounce if you do find that dream home or that property that you want to go with.
I think as well it allows you to view properties and confidently tell an agent that you are able to buy it,
Yeah,
because I know from experience that, especially in a market that's quite hot, agents aren't going to waste time.
absolutely. Yeah,
They have so many people interested. They need to know that it's somebody who turned up to view it, who makes an offer, has an ability to follow
yeah,
through on it.
yeah. And I think that's a really good point, Steph, in terms of, when you're dealing with the estate agents, that they do know that you are mortgage approved, you're ready to go, and
Mm.
obviously almost for them to take you seriously. And yeah, that's it. So it's not to be on the back foot that you're only starting the process of the mortgage. And yeah, that's it.
There's a really strong reputation, I would see it, with EBS for customer service. That must be difficult to kind of maintain that, particularly when you've seen an uptick in new clients, kind of a challenging market for the existing clients in terms of finding properties. What do you do as a team to kind of, I suppose, bring that level of service to each client that you work with?
So I think from my perspective, it's to have me as a point of contact from the outset. They deal with me from start to finish, and the one thing I always do is make myself available on the phone or
Mm.
email at all times. Very much that there's quite a lot to the process. So again, as I said earlier, it's just to make the customer aware in terms of each step of the process, and then on that, myself and my team will update the customer at every different step of the process, just to make them aware of where we are, what's next, engage with the various stakeholders, such as solicitors on their behalf, really handhold them through the whole process from start to finish, and make the experience or journey as smooth as possible for them.
Mm. 'Cause it is a stressful time for people, isn't it? Particularly when they're coming home. I often think that, getting a property, getting a mortgage, it's just one small facet of like building a life for yourself in Ireland. You've had many other things to take into account before that. So I think working with teams that kind of respect that and understand the challenges makes such a difference when people are going through the ringer a little bit.
Yeah, absolutely. Well, it's the single biggest transaction I think most people will make in their life, and it's if we can make that any way easier, that's what we try and do.
Mm-hmm. If somebody wants to contact you, Rob, and they're looking for advice on purchasing a property in Ireland, and I specifically would kind of just say this, from experience as well, that doesn't matter how far out they are, because you said to me before, you always think there's a merit in talking to people well in advance. Firstly, tell us why you think that, and then secondly, how does someone contact you if they are keen to make contact, have a chat?
Well, I think it like anything, it's to have as much information as possible at the earliest possible stage. So if there is a number that you need to meet in terms of, let's say, for example, that repayment capacity piece, that that 6 months prior to actually making that application. So, I don't think it's ever too early to have a conversation with an advisor, and get as much information as you can in terms of what is required. I would typically send the checklist at the earliest possible stage as well, just because there's always going to be quite a few questions around that, and it might involve a third party like an accountant. So it's also to make them aware of what we're going to be looking for, be it tax returns or, audited accounts for the business. So at least if the customer knows, that 6 months prior to that, or a few months prior to that, at least it gives the accountant the opportunity to have everything ready at the time when we're submitting the application. If someone wants to get in contact with me, it's very simple. I can be got in contact on my email, which is rob.priestman@mail.ebs.ie, and then mobile, which is an Irish number, so 00353 87 9037 867.
It's brilliant. It's fantastic that people can contact you by phone. That's not as common anymore. Um, just to kind of round out the discussion and just to kind of hark back to the three kind of type of clients that I mentioned that, we would routinely see asking us questions. One of them that we haven't touched on too much because we've kind of spoken about, being mortgage ready, having a foreign employer or foreign currency doesn't stand in the way. It just changes the calculation slightly.
Yeah.
That cohort of people who maybe are coming back and who want to build a house in Ireland, is there anything specifically you'd like them to take from this episode in terms of what getting ready for them might look like? Because that's a slightly different category to the ones that we've touched on this far.
Well, the documentation is almost the same, albeit you're obviously going to have more information or more documentation required for sort of the costings around that build. But in terms of how much they can borrow, it's very similar. To get mortgage ready would be almost identical in terms of the documentation, and the advice doesn't change in terms of getting in touch at the earliest possible stage and know what's involved in that process. But we do see a lot of inquiries coming through for that self-build piece, which in EBS we're particularly good at. Also for on the purchase side of things.
Okay. Yeah. Okay. So basically, even if you feel you're not necessarily in the standard category of client because you're planning to build a house rather than buy an existing one, the process looks the same. Reach out early, have a
Yeah.
chat. And sometimes I think as well, there's huge benefit in people because people will often say to me, oh, I'm a year, I'm 2 years away from buying a house, and I'll often say to them, look, you probably benefit from a chat at this point because particularly when people are coming from particularly the US or Canada or Australia, where buying a property is just so different to how it is in
Yeah.
Ireland. In Australia, it was just so formulaic. Everything happened at a set interval. There was penalties in the contract if certain things didn't happen. You kind of knew where you were going to be. Whereas, and this has nothing to do with mortgages per se, but buying and selling a house in Ireland is just a slightly different process. And we've had other episodes that kind of spoken to solicitors about that who stepped us through the detail. But the point I'm making is, even if it's just to get a sense of what's this going to look like for me, the wealth of knowledge that somebody like yourself has built up over a 20-year career, and what you've seen in the market versus what you see now, it shouldn't be underestimated for somebody who's in the preliminary phase of trying to understand where they're going to end up.
Yeah, absolutely. And I do get told that every day, that it's certainly from a lot of my overseas buyers, how different it is, back in the States or in Australia. So yeah, so I think it's always an education for them in terms of what's involved, and I think on that it just highlights how important it is to speak to someone with a good level of experience in this area, or a specialist in this area, just to give you the lay of the land in terms of what's involved, and that's it. So again, there's no surprises through the process, and obviously have them in the best possible position that when we submit the application, that it's a positive result on the back of that.
Yeah, and I think the thing that's kind of just struck me through working with your team over the last couple of years is there is, sometimes I tend to see kind of online or in different forums kind of, hard and fast rules that people talk about. Well, you can't do this. If X is this, then Y will never be that. And what I've kind of learned is that's not always the case, is that there can be circumstances where it's a case by case situation. So try to, review your situation through the lens of,
Yeah,
what's in front of you with an advisor versus make assumptions because you may disadvantage yourself
yeah.
by not proactively getting information and then look back and go, oh, I wish I'd asked that question sooner because it isn't as I thought it was.
Steph, that's a really, really good point in terms of, every case is different. So, when you're looking at a case, it is very much on a case by case basis. But from myself and my team, it's to understand that particular case inside out before we submit the application to underwriting. So we really get under the bonnet of, if it's self-employed, we get under the bonnet of the business, understand their financials. It's going to be different for everybody. So understanding that from our side of things is so important in terms of how we present the proposals, that we get that positive result at the end of it.
Thank you so much, Rob. It's brilliant to be able to, I suppose, chat to you and kind of go through the detail of what you do on a day-by-day basis and how you kind of work with your clients. We will drop your email address and your mobile number into the show notes. So anybody who's listened to this episode and who'd like to have a chat with Rob, Rob offers introductory consultations with potential clients. And as you can hear, everybody will get a lot of value from those initial chats. Yeah, it's been great to have you on. Thank you so much for coming on.
Great to be on, Steph. Thanks for having me.
Yeah, pleasure. And I'm sure there'll be plenty of opportunities for us to do it again in future.
Yeah, look forward to that.
Thanks for listening to Taxbytes for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.